Hey guys, Joe here from JCS-Charting. Welcome to another market update. Lots of fear in the market lately. This is here, by the way, my DAX record book. It just tracks my DAX performance of my swing trades. I do that with options, and October hit another record month of 19,535. November is lagging behind a little bit, but still I made 1,836 DAX points. This adds up within 1 year of roughly 108,000 DAX points itself. Here you see what's actually possible if you have a proper plan and an exit strategy. Mine is usually hedging for securing positions. And as I said, a lot of fears in the market. DAX has very wild swings, and we have a closer look at that. This is my highly appreciated subcycle chart. It's a DAX H4 time frame, the Cetera indication, and it measures basically time frames on a shorter notice to give us time periods where to buy the DAX. And as you can see, this worked out quite well in the past couple of weeks. This one here was a bit early. There we had that wild rally up to 24,441, and then that sell-off starting on Thursday overnight already, and then we were setting a subcycle low on Friday afternoon. This was right in our suggested time frame. Members knew about it. It actually went much deeper than I thought, but still we were hedging positions right from the beginning, and the low marked actually our exit point of the hedge. Why is that now a new subcycle start at 23,609? The rally was already as big as 283 DAX points, which means that cycle low here is confirmed, and that needs to hold if the cycle wants to turn or wants to stay bullish as the last one. Next cycle low is due by the 20th, and as I mentioned in my previous updates for members, after two bearish cycles there's usually a bullish one. This one was very bullish, even it turned down by a lot. I assume a similar reaction at DAX now. We switch into the daily chart, still the Cetera indication. What you see here is a so-called F flag. You have a pole that is at April Valley, and then you have a slightly rising channel, which is nothing more than just distribution, just a sideways consolidation at DAX. This phase here is usually used to cool off all indicators, and which makes them actually useless. And you see here there are several rallies which got all killed after a certain amount of time. And what happens usually once that pattern breaks, and we were testing that lower boundary on that Friday on the 7th, you duplicate that channel to either the down or the upside. For the downside, it would run somewhere near 22,000. If it breaks up, you get levels near 26,440. Now, we have here two levels. The first one was our long-term target at 24,774. That is our second minimum target, and that got hit with that all-time high on the dot. And there's still one open target at 25,847 at DAX. In order to get there, we clearly need to break above 24,771. DAX has made already a 23.6 correction, which is the smallest bullish retracement in a bullish market, which we are still in. There's actually a lot of fear just because DAX is going nowhere, and that's actually quite funny to watch. In my understanding, DAX is setting up for something bigger. Either we see a drop before it explodes to the upside, or it's going straight up. And we stay within the daily chart. I added here the VDAX, the volatility index of DAX at the bottom. And I just want to show you whenever DAX is spiking out of these Bollinger Bands. Like here we saw a rally, here we saw a major turnaround. Again with that low on Friday on the 7th. And the next spike was last Friday, and we got a nice hammer candle at the cash indication. There's also a bullish divergence building up, so I would take that serious, especially that we have a cycle low due at the VDAX at the end of November. We're jumping into my Discord, and this is my H1 thread of the DAX channel. Everything here is nicely in order with the time frames, and if you want to get informations like that, you're welcome to join at www.jcs-charting.com. You can translate these texts or these reports here into whatever language you want. You just react to that block here with a flag of your choice, and then you get a direct message in the language you requested. And this here was on Thursday, and that was already after hours. DAX hit my crucial level 23,998. That was also my hedging level, which I inform my members with. And then if we break that level, or if we trigger for lower, that means once we break that level from above, we're going for the second minimum target in the hedge position 23,807. Yeah, that means I was long, by the way, and I'm still long. I was just hedging 200 points to the downside. And this is what happened then on Friday morning. Here we see after hours on Thursday that broke, that triggered that sequence. Then we went a little bit in there, which is a typical behavior. Then it bounced. But since that sequence got triggered, we know we should run into this minimum target zone, which has a very high probability of this one here, 94%, and this one has a high probability of 85%. And here you see how accurate these lines work. We took the hedge out at 23,807, so we were fine. And then on Friday the selling continued. We broke that 138%. Here's where everyone got nervous. Said now we are most likely running to 23,690. This is what happened. We went right there. We closed another fair value gap. By the way, we have plenty of new ones to the upside. And that was the update on, let me check, at 1 p.m. And you see DAX went all the way down, broke even the 23,690 level, and came to our next hedging trigger, 23,595. Very close. And I even tell my members a lot for these charts. There are several updates during the day. So in summary here, 23,595, that you get an idea of it, is the next critical hedge trigger. The primary target for that is in 23,286, and the max sell level is 23,095. And then late, this is by the way South American time, by the way, I'm not in Europe presently, it went all the way down to that trigger 23,595, and DAX bounced again. I consider that entire sell here as a large ABC, and I think DAX is about to fake out everyone, especially during these Mercury retrograde periods, which we are in right now. The next one is the SP 500. It's a weekly chart, the cash indication, and I just pointed out here all inside weeks with that red arrow right here. This one was an inside week of this one was an inside week, and that was an inside week. Last week we had another inside week. And every time we had that inside week, the S&P 500 actually went higher afterwards. This one was a bit different. This was a so-called pop gun. So this candle here is trapped within this candle here and the previous week. And this one popped to the upside for a very long time now. And we haven't created a new pop gun at this point. So at some point, the S&P 500 needs to pull back to that level. That would be my first target for 2026. But I don't think the S&P 500 is done. My initial target here, by the way, you can see it on the arrow, is somewhere near 7,200, considering this chart. And something very interesting happened once again at the VIX last week. I pointed that out to my members, especially when we see these two digits rallies at volatility. We had already 21.7 at the peak on Thursday, and then at the pre-markets we were somewhere near 28-29%. Once the cash opened, we were at the peak of 31.52% comparing to Friday, comparing to the Wednesday, so 2 days back. I told my members most likely we are going to see a volatility crash after, either during the session or latest into Monday. I think that crash will continue on Monday. There's a subcycle low on the 20th, and this is actually quite a big one. What's interesting is that we never got somewhere near that spike on the 17th of October, which scared everyone off. We were buying, by the way, we were buying on Friday the S&P, or basically all US markets as well, even crypto. And I believe probably that here will extend a bit into late November, that low. And let me just show you one thing. Same thing with the Bollinger Bands here. Every time that spikes out, or every time these bands contract, there's usually a pressure relief. This one was to the upside, and usually after a while they test the downside here as well. We continue with the NASDAQ 100, also a weekly chart, and it's the cash indication. And I zoomed out all the way back to that all-time high we made in 2021, and before we went into that 10-month, well, it was actually a 9 months correction at the tech sector. Then we started that rally here all the way to these all-time highs in February of this year, and then we saw that sharp decline, which was nothing more than a backtest of that all-time high of 2021. The same thing happened at the S&P 500. We were just backtesting these all-time highs. And now the NASDAQ is moving up in a rising potential channel. It's not a channel yet because I'm missing a touch here at the upper boundary line. We have two touches here at the bottom. Here actually two. Then that April low is the second or the third one. Here, by the way, is that PG pullback, which is also active at the NASDAQ, so same setup as the S&P 500. But this one, to make it a channel, we need to run somewhere near 27,000 at the NASDAQ. And what's quite important here, members know already about it, 24,534. That was exactly the low on Friday the 10th. And the low on the previous week was slightly higher. Now this one here is a 100% trigger of a very big weekly sequence. In other words, that sequence here triggered for actually higher targets, which can be seen at my Discord. And the NASDAQ tried to break out, and then, well, it did already here the breakout and then pulled back a little bit, and then there was a real breakout attempt. And now it's doing nothing more than back testing that breakout level, in my theory. So as long as that level holds, this is actually a very bullish sign to stay above 24,534, and this happened now basically 2 weeks in a row. And yeah, targets can be seen at my Discord for the NASDAQ. To give you another little hint, we are scaling down to the H4 time frame, JFD indication this time, and we use this chart once we have actually larger moves within a shorter amount of time. Here you see these zones, two green ones, which consist out of these lows. Here we got the same. NASDAQ turned at the first zone already. And here we got a red zone, which is already a target zone once that red sequence gets triggered. I had a few nice projections, and here you won't see here to touch that line. We turned roughly 50 bips above that red 100% before NASDAQ started to turn higher. If NASDAQ now continues to move higher, you have to be aware this couldn't be another W-shaped bottom. At the NASDAQ, which it likes to do quite often. And there are still open targets of triggered sequences. The blue, well, missed that out by just a little bit, but the green one still has a target at 26,384. Before we look at the Dow Jones, we have a look at the smart money flow at the NASDAQ. And the NASDAQ, by the way, was the only one making a new low on Friday compared to that low on the previous Friday. And once you have a look here, that increase of smart money occurred from that low on the previous Friday. Does that look any bearish to you when big guys are actually buying like that? It doesn't. Even this here looks very corrective. And yes, there was a bit outflow on Friday, but nothing compared of that rise. In other words, big guys or big institutions are loading up again, and that's what most people don't check and don't want to accept. We were already at a record high, by the way, on Thursday of smart money, and that tells you actually something. So be aware if you think that market is turning around very sharply. These are just aggressive moves, in my point of view, to shake off these young bulls in order to run higher. Just my 2 cents here. And this is the Dow Theory we kept talking about for the last couple of weeks. That purple divergence here that became invalidated because that high here actually broke that high here at the transportations. That we can take that out of the chart. However, that large one, which is on since November of last year, so it lasts more than a year, it's still active. And as long as the transportations don't break that high, which I think is the case, and the industrials probably keep making new highs. Even this year looks like a reversal candle into November. I believe this divergence here keeps building up, and this will cause that larger correction into 2026. Remember last time, I think it was last time in my video, I showed statistics about if we are over 15% up in the SP 500 by the end of October, and this happened this year. There's a very high probability that November and December are turning out to be green as well. Just be aware of that we could run still, or could end up very green for November still. This is just pure statistics, and we just use high probabilities. That's all. A quick look at Bitcoin. These are here our bullish periods shown in yellow. The last one I had actually failed. That was the first one since April. And what I just want to show you is the decline. Like here's the all-time high we topped out in on the 6th of December, and we went for a 61.8 correction of that April rally. By now, we are approaching a cycle low here at Bitcoin, and we haven't touched that 61.8 yet. To be very precise, 94,215, and this is still a bullish retracement. There is a bullish Wolver Wave wedge here as well, and it triggered right in that time frame. That means, in my understanding, this is actually a buy at least for somewhere near 110,000. There are several open targets I have at Bitcoin for actually lower price targets, but they are somewhere near the 94,000 mark. So I assume we have quite a high probability that Bitcoin is actually turning around, and my targets into the end of the year are actually higher than that all-time high. A quick look at Ethereum. This is the H4 time frame, and here you see what I meant with Bitcoin and that we still have lower targets. Here you see that red sequence at 3321 that triggered for lower, and it hit that first target at 3068 quite early, and then it started to turn around, and we were hitting that level again last Friday. What I don't like about it is that the 127% is rarely that turnaround level. Most of the time the 138 or the 161. So I would prefer to see 2,965 or even 2,745 before Ethereum turns around. Now there's still a chance that this here is a double bottom and Ethereum is working on a proper bottom at the 127. That would be an exception, but still valid. That's why I bought already at Ethereum. But I wouldn't be scared if we drop a bit further or even down here, because I think also Ethereum is running much higher. Cycle low is also due here, by the way. Yeah, last one I got for you is gold. Gold, yeah, got a nice relief rally after these lows we made at the end of October. We triggered here that blue sequence, hit all the minimum targets, went a bit higher, and then I came up with a green sequence from 4144, and here you see again how accurate these sequences work. We hit the 138%, which loves to be turnaround. I still assume this here is an ABC, a very sharp run before we run higher at gold. We triggered actually here a bearish sequence, and I think I need to check on the hourly chart. I think we hit the first minimum target only, so we could see another little dive before gold is starting to run up again. Yeah, that's about it for this week. I hope you liked that video. I hope it helps you a little bit, and I most likely see you next week. Leave me a like or a nice comment, and I wish you a nice remaining weekend. Thank you and bye-bye.